Hi there, welcome to Kneppy Invest. It is humid here in Brisbane today, or right now. I'm recording this video at around about 4:30 p.m. local time. The markets have closed on what is the busiest day of the year for me. Well, equal fourth busiest day of the year. So January the 31st, the last day of April, the last day of July, and the last day of October tend to be the busiest days of the year for me because the majority of companies that need to release a quarter report decide to wait to the last minute. And not only that, the majority of companies who have had a bad quarter decide to leave their Appendix 4C or 5B to the last day they can release it, which is usually the last day of the first month after the quarter has finished. Because if they don't release it today or before trading begins tomorrow on the 1st of February, their shares will be suspended from trading. And for some reason, the CEOs and management of companies, if they do have a bad quarter, prefer to wait to the last minute. And that means sometimes on that last day of the month, January, April, July, October, it can be an absolute bloodbath for small cap companies or a bloodbath for investors who like to invest in small cap companies, because we have seen a plethora of these small caps on the ASX fall by more than 10%. Because the market has not liked their Appendix 4C or Appendix 5B. But it's not all bad news. There are a few companies that released their quarterly report and the market liked it. And we saw a few companies up pretty big today. Not as much as we saw yesterday. I did a video on that. Companies did really well on January the 30th when they did not release their Appendix 4C or the quarterly report at the last minute. So we're going to have a look at the few winners, but by far there were way more losers today. I'd say about 20 to 30 companies' share price fell by more than 10% today. So let's get into it. But before we have a look at the losers, let's have a look at the winners. Let's be a little bit more positive. Let's have a little bit more sunshine, because right now I'm looking outside, a lot of grey skies out there. I wouldn't be surprised to see if we're going to get a thunderstorm or something like that soon, because it is humid. Dew point's about 23 right now in Brisbane. If you don't know what a dew point is, or dew point temperature, have a look at it, because it is more important than relative humidity. As a professional meteorologist, we don't look at relative humidity at all. We look at dew point temperature. So look at temperature, dew point temperature. And if you know anything about those two, you would know a dew point temperature of 23 with a temperature of 29 is really humid. So let's have a look at some of those winners that released their Appendix 4C or their Appendix 5B today on January the 31st. The first thing I usually do at the end of trading is look or go to Market Index, and they have a link there which focuses on the companies with the best gains of the day and the biggest losses of the day. A nice little link, and they sort of weed out those companies at a share price of 0.1 cents, because if they go up from 0.1 cents to 0.2 cents, that's 100% gain, and we don't really want to focus on those type of companies. So here we have about the top 12 or 13 best performing companies on the ASX today on January the 31st. The best performing company was IHR. Not really going to focus on that, because the reason that share price went up 66.7% was because of a takeover offer. So, and that takeover offer was quite a premium to where the share price was, about 6.3 cents. You can see in the market cap of the company, 35.7 million, and the share price, even with it being up 67% today, is down 38% over the past year. That's another reason I love this particular chart, or whatever you want to call it, list from Market Index. It has the market cap of the company, sector, turnover, how much has changed, and also the 1 year change in the share price. The second best performing company, I'm going to say this is the best performing company today, because this was on the back of some really good financial news, and that company was Money Meat, a company that has been absolutely pillaged by people on AusCore the Biz, or AusBiz the Core program. It has come up a few times over the past month or so, and the analysts have not liked this company at all. They think this company will suffer. But you can see by the share price rise, 64%, up 18 cents to 46 cents, that this company did release something pretty good. They did release a trading update, and this company is now profitable. And that's a very important word. They are now profitable. So even though the share price rallied 64% today, it's still down 76% over the past year, and the markup is 130 million. At the start of the day, the markup was 84 million. Yes, I did have a look at this trading update and I went, oh, this is a pretty good update, but I wasn't sure if the share price was going to rally because the share price has fallen a lot over the past year. And there's still a little bit of negativity in there, but maybe that negativity has been washed through. There's no more negativity left. I'm going to go past now Gimby and Lincoln Minerals. And Mera International was one of the best performing companies on the 30th. And that positive sentiment has sort of filtered through today, up another 20%, up to 18 cents. And the markup of that company is now about 75 million. I'm going to have a closer look at that company. Health and Plant Protein, HPP, they've sold off their macadamia business, and for some reason the market loved it, up 20%, although it's on a low base, up from 5 cents to 6 cents, and the markup of that company is 7.4 million. So I'm not sure if the market really reacted well to that announcement. Wellfully released, I think they released anything, but Button, I think the reason that share price is up 16% because they're in the same sort of sector as MoneyMe. So I think that they're just feeding off MoneyMe's positiveness. But two companies that did release an Appendix 4C today, Whitehawk and Arctis, both up 15% or around about that, and that's on the back of their positive Appendix 4C. Now, I had a look at both of those Appendix 4Cs, and I wouldn't necessarily classify both of those Appendix 4Cs as positive. Another company that released a positive Appendix 4C was Felix Group, and when I had a look at that Appendix 4C, in my opinion, that was positive. I was a little bit surprised by what I saw for Felix Group. So I'm going to have a closer look at that company because maybe the sentiment in Felix Group is starting to turn around. And Harmony up 13.7%. And I have a feeling Harmony is in the same sector as Button and MoneyMe. But Harmony also released an announcement today talking about them being profitable. So they are profitable, markup at only 63 million, but still down 63.7% over the past year. So a few companies in this list of winners on the ASX did release a positive Appendix 4C, but nothing like the losers we're going to look at in the next few slides. Now, the worst performing company on the ASX today was a company called New Energy Solar, down 66%. Now, in my opinion, this is not a loser. And there's a main reason why the share price of this company was down 13.5 cents is because shareholders received a capital return of 13.5 cents today. So it went ex-dividend today. And when a company goes ex-dividend, the share price should fall around about the return that's given back to the shareholders. And that capital return was 13.5 cents, sort of almost identical to what the share price decreased today. So this was not a loss to shareholders because they get that capital return. And they also mentioned in this particular announcement that the NAV, net asset value, fell from 21 cents to 8 cents because of that share capital return. So this is not a loser in my books because shareholders are getting back a 13.5 per share capital return. Now on to the losers for today, and there are a multitude, a plethora, an amazing amount of companies that released an Appendix 4C today that are on this list. In fact, I'm going to have to talk about a few other companies that I will not show you whose share price fell by more than 10% today, and I'm just counting them very quickly here. So there's 13 other companies that is not on this list. So I do have about 2 or 3. Let me have a look. I've probably 2 pages here of about maybe 10 companies, and then a further 13 companies. So we're talking about maybe 20 to 25 companies whose share price fell by more than 10% today on the back of a negative Appendix 4C. When I say negative, that's how the market perceives the Appendix 4C or 5B, because there's a couple of mining companies in this list. So let's go past New Energy. The second worst performing company is Regenius, and they did release an Appendix 4C, but the share price did not decrease 46% because of the Appendix 4C. They also announced the termination of a license because of non-performance. So Regenius wasn't the one who was non-performing. It was the one they had a license with. So the market didn't like that. That's why the share price fell by 46%. Allegiance Coal did release an Appendix 5B. They released that just after the close of trading on January the 30th. And the market didn't like it. The share price down 31.6%. You can tell by the name that it is a coal company. Markup of only $26 million. Share price down 93% going in the complete opposite direction to other coal companies. Now, another company that released Appendix 4C that was perceived as negative by the market, Bird Dog Technology. I did have a look at that particular Appendix 4C, and I did sort of understand why the market perceived that as being negative. Maybe not 25.6% down, sort of negative, but the market didn't like Bird Dog Technologies 4C. Megaport down 25% today on the back of the release of their latest disappointing Appendix 4C. I did have a look at that quarterly report, and I can understand why the market punished Megaport. But still, the market cap of that company is at 914 million, and it's down 57% over the past year. Now, I thought if the share price got below $5.50, that would be really negative and a bad look. But Megaport share price stayed just above $5.50. I think the low was about $5.50. So it does look like potentially $5.50 is a nice little support level for Megaport. But I would think, but on the back of this particular quarter report, there's going to be increasing negative sentiment for that company. Black Mountain Energy share price did not decrease by 22% because of a negative report. In fact, I think that's profit taking, because the share price of that company was up 34% on the 27th and up another 5% yesterday. So I think the reason that share price was down 22% was on the back of some profit taking. But Pointerra share price decreased 22% on the back of a disappointing Appendix 4C. It had rallied over the last few days and is now down about 52% over the past year. Market cap is still $122 million. Share price now at 18 cents. It did look like the sentiment in that company was trying to turn positive, and this particular Appendix 4C has probably put on lid on that growing, possible growing positive sentiment. Some other companies that released a negative Appendix 4C today include Geffen International. The share price of this company is down 87% over the past year. One thing you'll notice here, and I've just noticed it here, all these companies on this list, if you look at the year change in share price, are down big. There's not one single green here. Yeah, look at it. Down 91%, down 73%, down 93%, down 70%, down 57%, down 71%, even though Black Mountain was profit taking. Pointerra down 52%, Geffen down 87%, American West Metals, I'm not sure why that was down. I didn't have a close look, down 35%. Way to that released their Appendix 4C, down 88% for the year, with a market cap now of only 3.96 million, and another negative Appendix 4C down 18%. PointsBet down 71%. This company released another negative Appendix 4C. In terms of operating cash outflow, free cash outflow, when you look at the cash receipts, it's still growing, but this company is spending a massive amount of money on marketing because of competition in that space. And I think the market is getting a little bit sick of this company going back to the market to raise capital, down 17.4% today. And another company that released a negative Appendix 4C, and I sort of disagree with how the market reacted to Tezzeret. That share price down 16.7%. Now, I haven't had a close look at it. They were operating cash flow positive, but receipts did pull back from the previous few quarters. So maybe the market was just focusing on the receipts. But Tezzeret down 16.7% to 10 cents. And the market cap of that company is now 135 million, only down 39% over the past year. So it's actually one of the best performing companies in this list. So that is the list of some of the worst performing companies on the ASX today. And the majority of these companies did release a negative. And when I say negative in terms of the market perception, a negative Appendix 4B or Appendix 4C or 5B. Now, some of the other companies that are not on this list, but did see the share price decrease by between 10 and 16% include TZ Limited, Playside, a company I actually do own, Norwood, Hollister, BetMakers, another one of these companies. It's not quite like PointsBet. They're sort of in that gambling area, but BetMakers is more into the supply of software, that sort of thing. USCom, Novarti, ExoFarm, New Century Resources released a negative Appendix 5B down over 10%. Bubs released, I think, a really negative Appendix 4C, and their share price was down big as well today. Dubber, and another company I own, Clinivel, down by about 11%. I think the receipts for that company was underwhelming in terms of what the market was probably expecting. But again, receipts for that company are seasonal, and we're now in the slow part of the year for Clinuvel. But I just think the market might have expecting a little bit more receipts for the current quarter. And finally, BWX. Now, BWX, I'm a little surprised the share price didn't decrease by more because they released some really negative news today. They released, I think, their very first Appendix 4C, but they also released a trading update. And it was, actually, it wasn't a trading update, it was a profit downgrade. And it was a big profit downgrade. I was expecting the share price to decrease more, but I think that is telling us, the market reaction is just telling us that they expected this sort of profit downgrade from BWX. And I do have concerns about the ongoing viability of BWX. They have over $100 million of debt, and I wouldn't be surprised if BWX isn't on the ASX in 2 years' time because they've gone that sort of thing. Anyway, so that's it for the losers on the ASX today. The majority of losers were companies that released a negative Appendix 4C or a negative Appendix 5B. So that's all I have for this video today. If you have any questions or any thoughts about some of the companies I've mentioned in today's video, I'd love to hear your thoughts, your reasoning, your questions, whatever you want to say. Maybe just need a rant. I'd love to listen or read your rant. So leave in the comment section of this video. Otherwise, I'm going to get my towel and wipe my brow because I'm sweating like a pig, although I do believe pigs don't sweat. But anyway, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.